Hello and welcome. My name is Brandon Wendell, Charter Market Technician, and this is my analysis of the U.S. Equity Index futures. I'm going to start off here with the S&P 500, and you can see that there is a weekly chart that's showing a lot of divergence. That is, whoops, wrong tool there. This is a very ominous sign for price where we made a new high, but we did it with much less momentum than we had before. So that's suggesting that prices are way too high and getting ready to drop at this point. So we have almost no momentum to keep us at these high prices. As I drop down into the daily chart, let's go ahead and change this around a little bit here so we can see it better. Something else is going on here, not just the divergence, which we still have, but we also can see that each one of the peaks that we've experienced in December, we have 1, 2, and 3. And what's happened with each one of these is twofold. Number one, we have failed to get above 60 on the RSI on each one of those peaks. Let's clone that, move it over. Oops. There we go. That's me. There we go. So each one of those failed to get above 60, which is a very bearish sign. And secondly, if you take a look at the movements on each one of these, they actually got progressively larger to the downside. Look at that. 1, 2, and 3. So we're seeing increased bearish pressure coming in as we progress. That's suggesting that we're going to continue to move to the downside. We're actually widening out altogether. It's kind of a broadening formation, which we've seen once before in the markets. Well, we've seen it many times before, but this is what it looks like right here, where prices are kind of widening out on both sides. And we'll see if that continues or not. So overall, this is looking pretty bearish for the markets. If we do drop, we don't really have any fresh demand until we reach down to this level, which is 43.54. So we've got a lot of room potentially to the downside, unless, of course, we bounce off of this broadening formation. Let's see if I go ahead and widen that and extend. There you go. So we could meet up with that and just, again, kind of go back and forth and back and forth. So if I go back, I'm trying to remember when the last one was for the broadening. It was really wide. Actually, I'd have to go to a continuous contract for it, so I'm not going to do that right this moment. But if we go down a smaller time frame to kind of fine tune the price action, see what's going on, we can see that, yeah, I can make this a little bit cleaner, first of all. And secondly, yeah, just seeing still a lot of bearishness. Actually, we're seeing sideways trend. That's confirming this broadening formation, which is often a correction. And you can see that we're back and forth, and just going back and forth on the momentum indicator as well. So this isn't really telling us there's any kind of trend direction in either side, either bullish or bearish, as we just are bouncing back and forth there. Overall, if we do continue to move to the downside, we don't really have much demand here. This has already been tested multiple times, so that's likely to break. I might as well remove it as well. And there's nothing really to hold us up. If we do break down all the way down to that daily demand, yep, nothing else really here on the 4-hour time frame. So we'll have to watch and see if we end up bouncing probably around the 45.40, 45.20 area, and then bounce up, and then we know that it would be the broadening formation that we're looking at, and we can go ahead and count on that going right back up to the upper portion of that formation. So we'll just watch to see as prices come down and test that bottom line. Dropping into the 60-minute time frame to fine tune this even further, we are seeing nothing more, excuse me, more bearishness in price and in momentum. So the price action is to the downside right now, and we're seeing momentum to the downside. Wouldn't really say there's any kind of divergence here. We did make a slightly higher low in price and less momentum as well. So it's kind of quieting down, but not really seeing anything that suggests that the prices are going to turn around. If we look left, looking for any kind of demand zones, I think we've already tested this. If not, that's where we're going to bounce. 45.94, and then below that, we have nothing for a while, it looks like. So if that 45.94 area doesn't hold, we could go all the way down to that 4-hour or even daily demand zone. And there's really not much here to hold. Maybe something here at the 43.90 area, but not a lot of confidence in that. Although, it's not bad with the price action there. So we go back up, and Yeah, this area has been tested. As you can see, it's already been used. So we're likely to go through that. And there's really nothing to hold it up other than that formation, the bottom of the formation, if that's what ends up holding us up. Trying to drop down to a 15-minute time frame to see if there's any entry points on Sunday evening or Monday morning. Not really seeing anything here. It looks as though we've already formed a rally-based drop, and we used that on the 17th as an opportunity to go short. But other than that, there's really nothing here. We do have drop-based rally on the 15-minute chart, which is a demand zone here. And that might cause a little bit of a push to the upside as we open up. So we'll just have to kind of watch to see what goes on there. Going back to the, I think it was a 4-hour chart, one thing I want to watch for is as we're coming down to retest this prior low at about 45.90, I want to check to see what is the momentum telling us. Because right now the RSI made a previous low here at about 38. And if we end up coming down to the prior low and we do it with less momentum, meaning the RSI is less or higher than 38, then I would expect a nice bounce and a move up to 46.46, maybe even higher. But if we come down into this area of prior lows of 45.90 and the momentum is lower than it was before, then expect it to go through and continue to be very, very bearish for this market. So we'll take a look at the NASDAQ now. Jump over there. And we'll take this out to a weekly chart as well. So looking at the weekly chart, seeing a lot more weakness in price here. As we've already been moving down quite a bit, we did have a divergence that led to a nice drop. Even these two peaks diverged with the lower high on the momentum indicator. So we pulled back quite a bit. Going down to the daily chart, see what's going on as far as any demand zones where we're pulling back to. Looks almost like, it's not really head and shoulders. I was thinking there was left shoulder, head, right, but it doesn't really fit. Not going to stretch it. But we do have rally, base, and a very weak rally, but that is somewhat of a demand zone I'd watch for. I don't think much of it, to be honest with you. I think this is going to be the better demand down here. Kind of correlates with what we saw in the S&P at the 14,784 area. So if anything, this might be a little pause or a speed bump that we really barely notice before we head down to the 14,784. I'm going to go ahead and remove it anyway. So as far as daily supply, there's nothing overhead, but of course we do have lots of momentum to the downside. You can see the RSI is not getting above 60, but it's also not getting below 40, which is somewhat bullish. So really what we're seeing is just consolidation and sideways movement on price. If I drop down to the 4-hour time frame now, and taking a look back, we don't really have a trend. Again, we're just getting highs and lows that are very similar, so we're seeing sideways price action. And we did pause a little bit already at this area of demand, but we've broken to the bottom of it and actually broken through, so not going to hold there. This one also has been tested multiple times. Doesn't look like it's going to be able to hold as we've gone very deep into it. And same thing that we saw on the S&P, that if we come back and retest these lows, we need to watch to see what our momentum is. It needs to be lower than we were before, which in this case is about 35 and a quarter. So if I look and see that the RSI is above 35 and a quarter as we come down to the prior low, then expect a bounce, because that would be divergence. But if it's lower, then expect the movement of price to continue to the downside. And let's see if we have any kind of a daily or 4-hour demand zone. We do. And that is right here. Drop base and rally at about 15,389, 15,279. And that gets us a little bit of a bounce before we hit the daily demand zone that's much, much lower. So going down to a 60-minute time frame to try to look at stuff for Sunday evening going into Monday, if there's some opportunities. And I'll remove this area that's already been tested. We're seeing some weakness as prices rallied up on Friday afternoon and couldn't get us into bullish territory on the momentum indicator. No real supply zones to speak of, so nothing setting up for a trade opportunity yet. Just gotta be patient, wait to see if something happens. Going all the way back here, not really seeing anything strong as far as demand zones, and we're not going to on the small time frame because this was not the front month back then. So if anything else, I can take a look down at a 15-minute time frame just to see if there's any kind of entry points that might give us an opportunity on Sunday evening or Monday morning, and the supply zone's already been tested. So unfortunately, we don't really have anything here. We'll have to wait for new opportunities to present themselves. So new zones to form. 15,896, 15,956. Again, that's already worked, and prices pushed down. So there is some other supply overhead. If we do try to rally up, we can meet up with selling pressure at 16,020. Yeah, I don't really see anything else right here that's great. I suppose you can mark all this. Yeah, drop, base, drop. I think this one's probably going to hold everything at 16,020 anyway. So moving on to the Dow. And once again, I'll go out to the weekly chart first, then work our way down. So we also had the divergence that we've been seeing on all the other markets here. You can see how weak the momentum was. Actually, it's not divergence. We just had weakness because we made a lower high on both the price and the indicator. So it's just overall weakness that came in on the Dow. We dropped down to the daily time frame to see what's going on there. And we did have a little a rally-based drop. Oh wait, this was actually legging candle, so all these are basing. There's no real drop there. Either way, prices failed to make some new highs. This is where the divergence actually occurred. You can see on the daily chart, we had a higher high in price. But looking at the indicator, we unfortunately made a lower high, and that's suggesting that prices would be turning to the downside. And sure enough, that's exactly what they did. You can see prices moving down on Friday. So looking back, we do have a demand zone here that could hold prices up a little bit. It'll be interesting to see. It wasn't as clean on the equities, the S&P or the NASDAQ, but here we do have drop, base, and rally. And then looking back, we're probably not going to find anything here. Everything else is just, again, it's not going to show you anything unless you use a continuous contract. But that's our first area of demand that we would come to, 34,601. Dropping down to the 4-hour time frame. Get rid of the divergence. It's there, actually. Just adjust it. You can see that the momentum died off as we tried to make some new highs in price. And that when you make highs in price, you want more momentum, not less. So if you do see that lower momentum, that's telling you prices are not going to be sustainable and they collapse. Looking back at our demand zone, we can actually fine tune this demand zone a little bit from that daily down to the 4-hour here. Change the colors just so we can differentiate between the two. So right here on the 4-hour demand, so we have rally, base, base, rally. And that's at 34,726, 34,547. So that'll be the first target for the move down. We actually do have supply right here, drop, base, drop. And because we broke the prior lows, we don't necessarily need to have the follow through candles for the leg out candle. Normally I want to see 2 new lows after a leg out, but here, because the leg out did breach prior lows, we're okay. So we take this down to a 60-minute time frame to see if there's anything tradable on the evening, Sunday evening into Monday morning, or even Monday. We do have a drop-based drop even here. So once again, we can fine-tune the entry, drop-based drop at 35,612, 35,661. And if we're looking for an area of demand that may cause a bounce or at least a target opportunity for our shorts, I'm going to remove this. We need to look back, and we do have something right here, as well as the origin of that overall rally. Oh, not really. I thought there might be something here, but it doesn't quite qualify. Unless I use this, we have drop. Well, it's too many candles then. So I can't really rationalize this as a zone. Really, the only zone is going to be down here. So if you take that 4-hour time frame zone that I was using and fine tune it a little bit, delete. You've got rally-based rally right there, 34,743. So overall, looks as though we might be able to do, that's not good. We may get a rally up to 35,612. That would be a shorting opportunity, targeting 34,743. This has been a pretty weak index, so that's a pretty good opportunity. If we go down to the 15-minute chart, we may have already turned where we're going to turn because you can see that we had rally, base drop, and this was the test of that area. So I'm not sure if we're going to be able to get up to that higher level. We may have already been used in the area of supply, but we can keep an eye out for this as well because it's still got a lot of selling pressure left. If we do happen to take a little rally on Monday morning, perhaps into that 35,475 could cause prices to turn down towards the 34,743. And finally, we take a look at the Russell 2000. Go back out to the weekly chart here and clean everything up. There we are. Unfortunately, that doesn't look very good, but that's okay. We can go down to the daily chart, get some better detail. Not as much, but you can see that, because this was not the front month contract, you'd have to use continuous contracts to really look back. And if we want to, we probably need to in order to find any kind of demand, to be honest with you. So let's do that. Using the continuous contracts, you can see we've got a lot of weakness here in the Russell compared to the other markets. It didn't even get close to the prior highs. So if we're looking back, trying to find an area of demand, now we have a target. Prior to this, just using the specific contract, we had nothing. So we have drop, base, rally. Honestly, probably use all this. Drop, base, rally. It looks better. So we're looking at 1976.5 to 1920.5. That's a little ways down, but that's what we're seeing on the Russell as a possibility to the downside. What you want to watch for is we've got a positive divergence going on right now. We've tried to make some new lows right here, but as we make those lows, we're not doing it with more momentum. We're doing it with a lot less momentum. So that's suggesting prices may go up or even sideways instead of going down. So we may not go down right away. That still has an opportunity for people to enter shorts. The only supply zone I have is not until here, I think. Drop, base, drop. At least in this time frame, this doesn't really qualify. So yeah, that's what I'd be looking at right now is, I would think the market would drop, but this is showing us that with that positive divergence, it can't drop very well and may indeed want to rally a bit. So let's take this down to a 4-hour time frame, see if we can fine tune this more. And we've kind of already used this area as supply. That's where we turned down from, so I can't imagine it's going to work again. And we still have a divergence here too, suggesting rally. So the Russell is actually suggesting the market may go up on Sunday night going into Monday. Look at that. We have less momentum than we had before. On the downside, that's a positive divergence. So this has already been a tested supply, and therefore we could see prices continue to go up a bit. There's not any fresh supply until the same area that we had on the bigger time frame right here. I kind of a drop base drop area at 23.33, 23.40. So that may be our target for this upside move right now. Unfortunately, I don't have a great demand zone for an entry, so just got to kind of watch out. Maybe if you get a breakout of a trend line. Just noticing that we might have a trend line going on here. Nope, not quite. It's got to line up right. There it goes. You got multiple touches. 1, 2, 3, 4, 5. So we can see that there's a trend line that was actually formed. Change the color of this so we can see it better. So perhaps a breakout is in order. We break out. I don't trade the breakouts. I usually wait for it to retest after the breakout and buy as it pulls back to retest from the other side. And then place the stop 1 ATR below. So whatever the average range is for the security on this time frame, which is 4 hours, that's where you place your stop. And then the target would be the supply zone at 23.33. So that's an opportunity that might be presenting itself. Or we could hold the trend line and continue our move to the downside as well. Going down to a 60-minute time frame to see if there's anything else going on here. We do have supply. Get rid of this. Seeing a lot of divergence still. We got the lower lows, higher lows right there. Anyway, we have, looks like rally-based drop and even drop-based drop supply zones overhead. So that may cause a little bit of a problem as we try to rally. And maybe the area that you go and short. Let's see the close on this. 22.15. Low. 15.5. 6. Okay, so close inside. So we have rally-based drop. 2 zones right there at the trend line. So rather than a long, maybe that positive divergence was just suggesting a little bit of a bounce And if we can possibly short at the intersection of both the trend line and the supply zone, that might be a really high quality shorting opportunity. As far as our target goes, I guess we could probably target some of this buying pressure, origin of the rally right here. But then afterwards, I would look back a little bit further to see something a little bit stronger. There's nothing wrong with having multiple targets and scaling out. You can see this area has been tested before. So we'll go back to see where there might be a fresh zone for a target. And we have one. Drop, base, base, and rally right there. And we're looking at 2093, 2069.1. So there we go. We've got possibilities going on here for shorting opportunities come Sunday night, Monday morning. And that's what I'm seeing on these equity markets as we're looking at those. I can also go out and take a look at the combination here. I actually changed this around because I was teaching a little bit about spreads, something I trade. But if we take a look at the ES and then compare it to other markets, I want to see who is our leader in each direction that we're going. Oops. Let's go with NQ. There we go. And now I can compare to the Dow. And finally, the Russell. There we go. And we'll change the color of these as well. Let's make them a little bit easier to see and read. And then the Dow. There we go. So the reason why I do this is I want to see who's leading us in whichever direction the market is traveling right now. And actually what I needed to do is figure out exactly where do we start rallying here. So if I go back to one of our equity markets, and I'll go to a daily time frame. There we go. And you can see, obviously, we're moving to the downside. We've been moving down here on the Russell since November 8th. Or actually, if I go to the S&P, yeah, we really have kind of sideways movement altogether there. Let's try the NASDAQ on the daily. I suppose all this is kind of a move down from the 22nd here. Yeah, this is all over the place. So it's kind of hard to pick a starting point because you can see the Dow, they're all moving in kind of different directions right now, which is a little bit crazy. So there's not really one spot that I can tell we're leading from. So let's go down to a smaller time frame, the 4 hour. We've got right here, December 16th, 6 a.m. from that most recent drop. So let's go and take a look. ES. And yeah, we're pretty good there. The 6 a.m. on the 16th. So I'll use that for now. I'm not going to check all of them. So all I have to do though is go back to my comparison chart that I created here and go to the 4 hour time frame. There we go. And we're looking at the 16th, 6 a.m. And we make that the hard left edge. And you can see everything zeroes out there now. So we can see that the weakest market currently is the NASDAQ. It had been the Russell, but then the Russell found a little bit of footing and popped to the upside. The reason why I want to know is that's the demand zone I'm more likely to be focused on. Because if the leader to the downside hits demand, that's where all the other markets are likely to pop to the upside. So I'll be focusing a bit more on the NASDAQ, maybe the Russell if it overtakes. So that's what I've got for you right now on the equity index futures. Until next time, trade safe, trade well, and take care.